A very good evening, everyone. I am Shrija.
And I am Anagha. We are your hosts for the evening.
We all are gathered here today to discuss and educate ourselves on early wage access programs and the financial well being of Indian families and the role of fintech in enabling these in organizations.
But before jumping in, we would first like to introduce Tether. In a nutshell, we are fintech enthusiasts. In addition to being a converging point for all things fintech, Tether is a space to learn and grow. The community also functions as an open forum where participants can reach out to industry experts, making the whole community bigger.
Join the community. Whether you're a fintech startup looking for investors or a fintech enthusiast wanting to stay updated with the latest in the fintech world, Tether is the place to be. Log on to tether.community to join our waitlist and become a member. The link is now available on the chat section on your screen.
But before we jump in, let's understand a little bit about the fintech industry itself. Let's understand a little bit about Tether itself a little bit more. Shrija, how about we introduce a little bit about today's topic though?
Absolutely. Even I want to know what we are going to talk about today.
Right. The financial well-being of Indian employees has been often discussed but rarely researched. A recently launched report titled Earned Wage Access in India, the final frontier of employee well-being, gives a ringside view of the state of the financial well-being of Indian employees. EWA also allows employers to access earned wages, which alleviates part of the burden of living paycheck to paycheck. The benefits of offering wage access to your employees relate to employee livelihood as well. Let this Tether community be the front runners in throwing light on role of fintech in enabling such programs. We have our speaker, Smiti Bhatt Deora, who is the co-founder and chief operating officer at Advantage Club. It is a global platform for employee engagement and financial wellness, including perks, rewards, and early wage access. Advantage Club brings multiple benefits on a single platform and is running successfully with 370 plus companies across 60 plus countries.
Audience, any questions you might have for the speaker, please share them on the Q&A section on your right hand side of the screen. We will have a quick Q&A session followed by our speaker's presentation. On that note, put your hands together for Smiti Bhatt Deora. Over to you, Smiti.
Thank you so much, Shrija. Thank you, Anaga, for inviting me to this forum today and letting me share my thoughts around earned wage access or early wage access or whatever works for the organizations and employees today. So, today I am going to just spend some time talking about the program, the concept, and how do you actually execute it. So, let me do one thing. Let me just share my screen first and we can begin. Just give me a second. So I hope my screen is visible to everyone.
Yes, Smriti, we can see your screen.
Perfect. Thank you. So what I'm gonna do primarily in terms of the 35 40 minutes which I'm going to spend here, I'm going to primarily talk about decoding earned wage access or early wage access as programs. And like Shrija mentioned, I'm Smiti. I'm one of the founders of Advantage Club. So a little bit of background about Advantage Club before I jump into the whole concept around earned wage access. So Advantage Club is an employee engagement platform where we have various modules through which we help employees get engaged, get better wellness in terms of financial, general, mental, etc. So we have our rewards and recognition programs, we have our tax saving modules, we have earned wage or early wage access as modules. We also have community features Just like Tether's community, we also build employee communities, and we help organizations engage better with their organizations and drive higher retention and lower attrition. So today's topic is around building employee financial wellness. So I have split the whole piece in four parts to make it more logical and also more sensible to everyone watching this today. First, I'm going to talk about the concept itself of what exactly is an EWA program, what is the difference between earned and an early wage access. Then I'm going to talk about the need for the program itself and how are the market trends, not just in India, but also globally, how this program has played out. Then we'll talk a little bit about execution strategies. While it looks pretty straightforward to implement, there are a few nuances we have to be aware of. So I'm going to talk about those. And lastly, I'm going to speak about the challenges which people usually face while running these programs and how do you actually overcome those programs itself. So let's start with the first one around the concept itself, that why do we actually need an earned wage and what exactly is an earned slash early wage access program. So the first thing we need to know about is flexible salary credit as a concept. This is a new concept which has come up to in India. This is something which had started in the West around about 5-6 years ago, and now there are a bunch of unicorns which have been built around those around this entire concept as well. Now, early versus earned wages are two different things. And early wage access for an employee is getting a salary advance before they've actually earned the wages. So, for example, if my monthly salary is X, I can pull up to 60% or up to 50% of my salary, even on the 5th of the month, even though I haven't earned that money yet. Whereas this is the early wage access, whereas earned wage access is where you've actually earned that money, which, you know, how sometimes it works in the gig economy, that you've earned, like, you work for 7 days, so you are eligible for, say, 70% of your 7 days earned wages. That is the earned wage access concept. Both concepts are pretty prevalent in the world today, including India and the West. And both concepts work in parallel. Usually, the differentiation between both concepts comes from the ideology of who is your employee exactly. Are you looking at, say, so I divide the employees' strength across the blue collar segment, and then and the lower spectrum of the white collar segments versus the regular white collar segment, higher spectrum of white, and then of course the supreme segment of white collars as well. So for something like a white and above, an early wage access would make more sense. Whereas for someone who is in a gray collar or in a lower spectrum of blue collar, usually the earned wage access program works better because they're more daily wages workers, and then they need that money on a very regular basis. So depending on the company, depending on the profiles, the earned versus early wages should be implemented, and also the need of the employee also needs to be taken into consideration. Another thing here is typically it's a higher approval rate. Usually, what happens in a standard setup is if you need a salary advance, you go to your employer or you go to your manager or your HR and you say that, hey, I have this XYZ reason because of which I want an early access to my salary. The employer usually asks you to either fill a form or give a certain specification around why do you need that advance in place. So if you're taking the early access from your employer, approval rates are not that high because, again, I might hesitate to go to my employer to ask for an early advance because maybe I'm shy, or maybe makes me look like I'm not able to manage my finances better. Or even if I go to them, my reason might not be relevant to the employer to actually give me an advance. Probably a reason that a family member is hospitalized is a good reason for an employer to give an advance or approve an advance. But the fact that I have my mother's birthday coming up and I want to buy her an iPhone, but I'm at the end of the month and gifts have to be given at the day of the birthday, it is not relevant to your salary, and that's why I need the money. That might not be acceptable to my employer to actually approve my salary advance, and I also might be ashamed to go and ask for that particular reason. Whereas if you're deploying platforms which are primarily looking into EWA as solutions, it is a no questions asked approval rate. So it typically depends on whether you are active in the organization. If you're not on notice period, there is a very high probability that you will get the earned wage or the early wage access from the platform, irrespective of whether you are able to justify the reason or not. You don't have to give anybody any reasons. So that's the benefit around EWA via platforms in general, where your approval rates are pretty high. Second thing which comes in terms of approval rates is there's a question that why don't you actually go to like a bank or go to like a standard B2C NBFC and get like a personal loan in place, right? So first of all, the challenge with banks is the earned wage accesses are like shorter amounts. They're like maybe a 10,000 or a 20,000 or a 30,000 rupee personal loan. Typically banks don't entertain those requests. Typically you go to a bank for at least a 2 lakh 3 lakh loan. So that becomes a challenge in terms of a bank approving a small term loan. And for different sorts of NBFCs, the major challenge which comes in is the overall amount of interest rate, the processing fee, the convenience fee which they charge. It's just a lot of amount which you have to pay, sometimes which even exceeds the amount which you have taken as a loan itself. And I'm going to talk a little bit about this in my future slides as well. Third thing is that when you're doing a flexible salary credit, typically it is integrated with your company's payroll. There are two reasons to do that. One is if you do a payroll deduction, if you look at any NBFC or any B2C lending company in the world, their maximum spends are across collections. So typically, if you're looking at at say an NBFC of 1,000 employees, there would be at least 800 employees who would be just put on collection. So 80% of your workforce is just collecting money all the time, and that is where your majority spends go as any NBFC who's in the market for an unsecured loan. However, in the payroll integration piece, the benefit which any EWA provider gets is that the deductions happen automatically, and hence your collection costs reduce significantly, at least almost by 90 to 100%, because of which the entire interest rate built in can be reduced significantly, making it more relevant to the employee as well as the employer, and of course the loan provider, the EWA company itself. So payroll integration becomes a very key point here to actually provide those amazing rates by just giving a small convenience fee and letting people take an early access to their salary at any point of time. Another benefit of payroll integration is typically, one option is of course to do like an integration. The other option is that your payroll team comes in place, and every month basis the payroll cycle, they get like a report in their inbox. Then they calculate the deductions, they create the whole thing. It's a very manual process. If your EWA partner is able to integrate with the payroll directly, that itself solves half of your problems, and you are able to easily just deduct it without any manual intervention. So when we talk about any benefit, of course, it's great. You give that benefit to the employees. What is the benefit of the benefit itself? I mean, why are you doing this? Why are we actually running EWA as a program in any organization for that matter? So first and foremost, it's a psychological impact in terms of the employee, that my salary suddenly has increased by say additional 50%, which was not there earlier. I might need to use it, I might not need to use it, but in case I need it, it's there for me. You know how banks always do those B2B loans or credits, that okay, you get a notification from your bank that as a company you have an additional 20 lakhs of credit. Now you might not need it today, but it also gives you a sense of peace, a peace of mind that okay, in case I need that money, I can anytime use it. Of course, there'll be an interest and everything put into it. Otherwise, I'll take it immediately. But there is a peace of mind which comes in. Same thing goes in an earned wage access or an early wage access program as well, where an employee is happy about the fact that okay, I have access to my EWA anytime, and if I have an emergency or I need money for anything for that matter, I can use it at any point of time without having to go to my family or friends or go to these unsecured loans, B2C companies, where I have to pay a lot of money to actually get that money in itself. Second, the benefit of the benefit here is, especially for employees who have salaries less than 50K, 60K per month, most of these people, if you look at today, are not financially very sound, right? So they all primarily live very paycheck to paycheck, and they're pretty much out of money by the 20th. And this is not related to what kind of industry you're working in, whether even if you're in IT sector or even if you're in the financial sector, there is a certain dearth of money which comes in at the end of the month. And what we've also, you might have also observed yourself as well, as in when people's salaries increase, their lifestyle also increases automatically. So even if you're earning a lakh a month or 1.5 lakhs per month, you would have increased your lifestyle in a manner that you will always be short of some money for some expense by the end of the month. So, however, the ideal use case for the employees for EWA would be less than 50, 60K earning people per month itself. Third benefit of the benefit here is quick access at any point of time. So is it related to maybe a medical emergency, or is it related to like you're planning a wedding? So it doesn't really matter. You can take money whenever you want. It comes instantly. You don't have to wait for longer approval cycles. You don't have to give a lot of paperwork, and that's one of the benefits which you get out here. Fourthly, it doesn't come at any cost to the employer itself. So while it is a software as a service, there is no service fee which is associated with this entire program itself, because the revenue model is built in from the employee's usage itself. And it's not a deterring factor for the HR to actually launch, because finance is not going to block you. Typically, if you look at any software as a service program, any SaaS program, when you're trying to sell it in the market, um, say for example, your program is around HR tech, right? So even if your HR is very on board that particular concept, your finance will block it, because your procurement, your finance will always try to pull down the costs, and they'll always try to figure out a way in which you can do it at a lower cost yourself. However, this is one of those few initiatives in which your finance, your procurement, your facilities, and your HR, they all come together, and they're not fighting each other for the costs, because it's at a zero cost to the employer itself, and it's all for the employee's benefit. And lastly, the biggest benefit in terms of attrition reduction or retention increment is that the employee only gets the benefit when they're on the payroll. So because it's a payroll deductible access, so if I leave my organization, I will stop having access to this wonderful benefit given to me by my company. I will have to go back to the erstwhile model of, say, going to a friend or a family member, or going to a B2C unsecured loan and paying a crazy amount of interest fee out there. So it also makes me feel more belonged to my organization, and I feel that this is a good benefit which I have. Even if somebody gives me a better package, at the end of the day I feel that, okay, right now I'm able to pull out up additional 50%, that option will go away. So at least I start thinking in that direction in terms of retention. And I feel that if I go out of the payroll, I lose out on this benefit, and hence it adds to your employee financial wellness, at the same time adding to additional retention piece on top of it, which of course the organizations care about the most itself. So let's talk about the second piece around what is the need of the program in the market. We've already spoken about the concept, and what are the market trends which are going on as of today, right? So let's talk about the need first. So if you're looking at non-earned wage access versus earned wage access or early wage access programs, what are the differences? If you're, say, taking a loan from the market, I've already spoken about it. Rates of loans are high. EWA is reasonable. There are no interest rates. There is a small convenience fee associated with each slab, and it doesn't matter what is the amount. As long as it's in a slab, there is a flat convenience fee which is very small, starts from like 50 rupees, 100 rupees, goes up to like 300 rupees for like a 20,000 loan itself. So fairly reasonable that way. In a non-EWA mechanism, you have to get your CIBIL scores checked, you have to do a lot of paperwork, you have to give salary slips. There's a lot of work which is needed to actually get that money in. However, with payroll integration, you don't have to go through a CIBIL check. The employee is already employed in the organization. Payroll can inform you whether the employee is on notice period, whether they are on a long holiday, whether, or actually they're active in the organization. So there are a lot of parameters which can be checked in via the payroll itself, and you just have to ping via an API on the payroll, and you don't have to do crazy paperwork over and over again there. Even CIBIL check, it can be skipped when you're looking at EWA as solutions itself. There is a small CKYC which happens, which is a standard RBI guideline, and it's just and a consent is taken. And again, I talk about the process and the consent in my future slides as well. But it's fairly easy to just get it quickly done within just 10 minutes. Thirdly, of course, interest rate, processing fee, hidden fees. There have been scenarios, especially around B2C apps, in which people have taken loans of 3,000 rupees, but at the end of the day, when they have that entire payout, their convenience fee, hidden fee, interest rate, everything combined goes beyond 3,000 rupees itself. So you're actually paying, eventually you're given a bill to pay which is higher than the amount of corpus which you've actually taken from the NBFC. So it's a very complicated hidden fee process, and a lot of people don't know what they're getting into. Whereas with EWA, it's a straightforward concept. Everybody knows what's going on, what is the amount. There are also some models in which you can waive off that convenience fee as well. And I'll talk about those models in my execution slides as well. Lastly, I've already spoken about approval rates, so you don't have to give any reasons, you get the approvals. It's really quick, really easy to access your salary advances at any point of time, however you want it. So let's talk about a typical month for a blue collar workforce and a typical month for a white collar workforce. When I say blue collar workforce, I'm just categorizing it as like a 30 less than 30K monthly salary kind of an employee. So typically for a blue collar workforce, where would you be spending all of your money, right? So, or why would you be needing the money to, where would your spends actually be pulled into? So for a blue collar workforce, it would primarily be on essentials, on ration, and people usually then go and borrow money from friends, neighbors, colleagues, and that's very standard. It could be because your rent is delayed, you've not been able to pay rent, and then there are penalties also on the rent which come in, especially if you're living in a area where rents are very low, and hence those penalty clauses have been built in by the landlords themselves, because they know that the paying capacity of the person in their houses is actually low, which doesn't typically happen if you are in like a high level society and you miss your rent by 3-4 days. It doesn't really matter, but in smaller areas these things do come into play. Or you might need the money to pay a school fee. You might need money to actually send home as well, and typically that's how it works. So typically a blue collar workforce, if they don't have like an EWA access, they would be taking money from their friends and colleagues, or they go to these NBFC apps in the market, and they get like crazy amounts of interest rates on top of that. So, at where would your expenses spike up if you're part of a blue collar workforce? Your expenses would spike up if there is like an event in the family, like a wedding, or a baby has been born, or if there's an emergency like a medical emergency, or you've lost somebody in the family, or something like a prolonged illness, where of course typically blue collar workforces, their insurances are not that strong, so a lot of money which also gets in added from their own salaries if there is a prolonged illness. And even things like local elections, or even things like when you have guests over on a staycation. So all of these places are where your expenses just spike up typically, irrespective of what you're earning or what you're not earning. For a white collar, it's a little different. So if I look at a white collar employee process itself, it's more than 45K monthly salary is what I'm defining as a white collar. Of course, again, it depends from people to people. So in a white collar setup, you might be overspending because you are going partying with your friends and colleagues, you're overspending on your credit cards, and you're kind of course, grocery and local shopping is something which is added. But for a white collar, you'd also be needing money to spend on weekend trips. You would want to maybe buy a bike, or you want to buy a car, and maybe pay off EMIs of that, or whatever reason it is. You might just have a party to attend to, so you splurge on a very expensive dress. So all of those things actually come in from a white collar perspective, where their needs are very different as compared to like a blue collar employee, where they are not living on the line, but still they're stressed out, they're still worried about their expenses, they're still borrowing money either from similar avenues. And their stress actually reduces their productivity in terms of work as well, and hence overall employee excitement and engagement also gets pulled down by these stressful options itself. So other expenses for which might spike in a year for a white collar could be like a trip, or even something like a big billion day sale, right? If there's a sale happening, people just want to shop and they don't have the money to actually shop. That is also where, for a white collar population, beyond your standard medical emergencies and family events, these are also the places where your expenses might just spike up throughout the year. So, what are the benefits which you get as employees if you are actually going for the EWA as a program? As employees, you get no CIBIL check. You have everything digitized in terms of documentation. And after recently buying a house and applying for a loan for that house, I have realized how important digitized documentation is. It was such a painful process. We had to do like 1,000 signatures. It was such a big headache. So digitized documentation is something which is a very big win when you're looking at an EWA as a program. Thirdly, you can do multiple withdrawals as well. Now, typically, if you're going to say your employer and you're asking for advance, you only go once, maybe in 3 months. But here you can actually withdraw 3 times in a month, 4 times in a month. Nobody's going to ask you those questions as well. And lastly, your disbursements also happen in minutes. So it's really quick, pretty fast. Same day you get the money and you can deploy it wherever you want to deploy it. For employers, the first major benefit is that if a third party is handling your EWA as a program, they can preserve their working capital. They can lower absconding risks. So typically what happens is, if I am giving money out of my own corpus as an organization to my own employees, if an employee absconds tomorrow, I lose that money, because typically organizations don't have the kind of bandwidth to even go after the employees and collect that money. So they just write it off. However, here, if an employee absconds, the EWA partner takes care of that risk and they write it off instead of the organization itself. So that's the first major benefit in terms of cost saving itself. Second, it also adds a holistic wellness program. While most organizations today are doing things around physical wellness, mental wellness, financial wellness has always taken a backseat. And this is something which has become so important post COVID for everyone to manage their finances effectively, that this adds to an indescribable add-on to your wellness program itself. Thirdly, you can do literally multiple salary requests. The payroll deducts together in one go. So it's not like, for if you are kind of taking 5 accesses in a month, you have to deduct 5 times. It happens once in a month. So it's fairly straightforward and collated in that particular manner. Of course, attrition, productivity, talent attraction, all of these pieces are also improved via the earned wage access program itself. And lastly, there is no change in your pay cycle. So if you have your monthly payroll calculation on the 20th of the month, then the EWA partner will share the data with you before that, and the deduction will happen on the same day on the 20th of the month. It's not like you have to create a separate pay cycle, pay these vendors separately. And most companies, it is a very difficult problem to actually pay on a very regular basis. So the pay cycle remains the same. You don't have to do those ad hoc payments at any point of time. So let's also talk about trends now, that how the entire industry has progressed over the years. And let's first talk about India, and then I'm going to talk about the US in terms of the salary distress itself, which people have faced. So As per your income tax return filing data for 2018-19, which is the latest data available via the government itself, 50% of the taxpayers actually earn less than 5 lakhs per year, which is a staggering number. If you think about it, 50% of the workforce actually has lesser salary than 5 lakhs in a year, which means 50% of people in this country who are working and are paying taxes are living paycheck to paycheck. That is the crazy amount of need which is there for the entire earned wage access solution itself. 86% have salaries less than 10 lakhs a year, while the people who are less than 10 lakhs per year and maybe between 5 to 10 lakhs per year might be qualified as the white collar piece which I showed you. At the same time, they are still under salary distress because of their lifestyle improvement. They have created a structure in which still by 20th to the 25th of the month they're out of the money. COVID has made employee financial management even harder. So, pre-COVID, of course, these things were just jargons and thoughts in people's minds. But post-COVID, then when people were really, really deprived of money and they were in need for this, that has made people realize the value of having some extra cash in hand in case you need it. And in 2020 financial year, there were 90,000 crores worth payday loans dispersed just in India itself. So imagine that's the kind of need which is there in the market today, because of which these programs are existing and are growing over time. Now let's talk about personal loan as trends, right? So if, and again, this is something which we've pulled out from the RBI website itself, around trends which have happened in terms of personal loans. So 52.5% loans dispersed by NBFCs today are personal loans. The rest are divided into your vehicle loans, gold loans, SME loans, BNPLs, etc. While there's so much of buzz around BNPL, if you can see, their percentage is fairly low compared to personal loans which are being dispersed today. Out of these 52.5% loans, 37.5% are with the tenure of within 30 days itself. And this is the highest number in your graph. If you look at it, this is one of the highest percentage metrics where people do need money within the tenure of 30 days, literally bashing the ideology that people don't need this. Let's talk about working group. They had done a study around digital lending of the RBI data. So what working group found between 1st of Jan to 28th of Feb 2021, that there are actually 81 app stores with Indian loan apps, out of which there are 1100 Indian apps which are actually providing loans. And this is just India market. I'm not even talking about the global market. There are 1100 apps which provide anything related to loans on the platform. If you search loan or quick loan or instant loan, you'll find 1100 such apps. Out of these 1100, funnily 600 are illegal in nature, which is ridiculous. They are illegal apps. They cannot be trusted. They are looting the consumers in that particular manner, and there have been so many cases of fraud and extortion via these apps. But that's how the world is moving. I mean, if there is a demand, there are also suppliers who are willing to exploit those demands and exploit the consumers in that particular manner. Now let's talk about matured markets. Now, India is of course a growing market, and India is always 5 to 10 years behind US market, is what I've felt in terms of initiatives. Earlier it used to be 10 years. Now we are closing to 5 years, in which whatever is implemented in the US market is usually implemented 5 years later, or at least grows 5 years later in the India market. So unless of course there is a situation like COVID where say online grocery just bumps up or online deliveries bump up, but typically it takes 5 years to whatever has been implemented there to actually start growing and working here. So let's talk about US. In US, typically, if you would have, if you can look at these graphs, again, this is like a Harvard Business School study, which I was looking at, and we've figured out certain trends which have come around the US market itself. Average withdrawal timings in terms of withdrawals itself, when people are taking the early access to salary, that is obviously closer to salary date. I mean, no surprises there. Typically after the 20th or after 25th, when you are like 10 days away from your salary or 5 days away from your salary, the spike comes up in terms of withdrawal. But what is interesting and non-intuitive is, people might end up thinking, and a lot of people think in that manner, that people might be withdrawing, like if you're if say for example your threshold is 60% of your salary, that you can actually withdraw up to 60% of your salary. The ideology is that people will be withdrawing 60% because they want to maximize that capping. However, data shows that the average withdrawal is less than 20% of your monthly income. So people are actually generally conscious about that fact, and they don't want to withdraw beyond a certain amount as well when you are actually withdrawing the amount itself. Similarly, this also helps employees get pulled out of the debt cycle. If you look at credit card psychology, it's exactly the opposite. You are spending twice of your salary, so you get into a crazy debt cycle in which you have to pay the debt. For that, you put your salary, you're out of money, you again take a credit card cycle. So typically credit card companies do not want you to pay off. They want you to keep being in that debt cycle, because of which especially in the US, before EWA kind of emerged as a concept, credit card debts were crazy high. And that is what actually led to the origin of EWA as a program itself. But if you look at the data in EWA itself, most people do not withdraw more than 40%. Frequency of use also reduces after your first adoption. So again, another misconception which is there in this industry is, if I take say 20% additional this month, then I will get 80% in the next month. I will not get the whole 100%. Then again, I will be in that same debt. I'll have to take 20% again in the next month. That is not true. Typically people just don't take it to increase their salary. People take it in case of emergencies or any sort of expense which they have to cover. And then you are doing an EWA kind of a concept. Data shows that while the frequency of taking the loan initially is high, even for frequent users, forget about infrequent users, even for frequent users, the usage frequency reduces over time instead of increasing over time, thereby actually pulling people out of the debt cycle. In terms of US again, in terms of the numbers, if I again look at that Harvard business study, there are staggering numbers. US households made around 56 million withdrawals in 2020 itself, out of which the entire corpus which was withdrawn was around $9.5 billion. And in 2017, it was literally one third of that. So this number tripled in 3 years, literally growing 100% year on year. And that itself shows what is the need of this platform or this program itself. Now let's talk about execution. Of course, we've spoken about the need. We've spoken about different ways in which trends have moved across India, across US. How do you execute an earned wage access program in general? So it's a simple mechanism. The first thing is employers, first of all, give that option to the employee. Employees are informed about that particular option. Uh, the earned wage access or the early wage access firm will automate the early wage payment via integration with the payroll. Employee will have access to their earned salaries or their early salaries on the app itself. So like if I look at the Advantage Club app, for example, there are two ways in which you can implement it. One, if we have the salary data, then we will be showing the employee exactly how much you're eligible to kind of pull out as of today. If we don't have the salary data, then we take slabs, and then you can see that, okay, this is the amount you're maximum allowed to pull at any point of time. As in when you keep pulling money out of that amount keeps reducing, and you have a clear understanding on what is the amount which is available to you to access at any point of time. Once employees access that, the employers transfer the remainder of their employee salaries on payday, and the amount which has already been pulled by the employee with the convenience fee deduction itself is shared with the WA partner itself in terms of the payout. So the payout happens in two ways. The first part of the payout, of course, happens to the employee after deducting the amount which they've already taken, and the remainder actually goes to the EWA firm, which is again collated for all employees together. So they don't have to pay like for each employee separately. It is a combined amount which goes on the same day as the payout, making it very easy and seamless for everybody, not just the EWA firm, even the employer and the employee in general. So there are different dispersal mechanisms also which you can utilize, and different are available worldwide. Like we support all of them, for example. So the first and the most obvious one is you take the money in your bank. there is a convenience fee which is deducted. So the amount gets deducted as a convenience fee. So if you're taking 20,000, then 200 rupees, if for example is your convenience fee, then 200 rupees gets deducted, and the remaining amount comes to your bank account after the deduction of the convenience fee. This is the most standard way. However, there are a lot of innovative ways which a lot of EWA providers have come in with recently around how do you actually even remove that convenience fee? Can we make it free for everybody? So there are options like you can do a closed wallet where you can get everything for free. So, for example, if I take Advantage Club, if I take our company, for example, there is a closed wallet where there are a lot of options to redeem from, like an Amazon or a Flipkart or a Myntra or a Big Basket or a Swiggy or a Zomato. So you can actually take that money for free in the wallet, and then the redemption from the wallet can happen on any of these brands. This is useful for that white collar workforce who want to spend and take money extra before the payday because of a big billion day sale or something. They can just use it on an Amazon or a Flipkart directly, buy a fridge or a microwave or a bed or whatever they want to buy. So that gives it to them absolutely free of cost. Another option which some companies have opted for, if they don't have a marketplace, a lot of B2C lending companies did this actually initially, in which they used to give you a voucher. Like you want 20K, I'll give you a 20K Amazon voucher, I'll give you a 20K Flipkart voucher, and then you can use it. While this is also another option in which you can give it for free, here the challenge is that you only get one specific voucher, so there isn't a choice. So a marketplace kind of becomes a better model in that particular case with a closed wallet. The third is, again, this is a new concept, and this was introduced first by Payactiv in the US, who is literally a unicorn now, one of the largest companies in earned wage access in the US. So they came up with this concept that they will give you a prepaid card and you can take your money in the card. The benefit of taking the money in the card is that you can swipe the card wherever you want and you can use it. Of course, you can't cash out the card. That's the only catch there. And then Payactiv makes like whatever MDR they make out of it in terms of the revenue model, and hence they're able to give it absolutely for free to the consumer itself. And lastly, of course, you can deduct it in parts, like a 3-month, 6-month EMI model. But then, of course, there is an EMI interest rate which is pulled in. However, even then, your interest rates are lower than what is available in the market because collection again happens from payroll, and the risks of absconding and all are much lesser when you are employed in an organization. So since I was talking about Payactiv, I also was going through one of their surveys in which they surveyed like 4,600 employees in 70 companies making less than $25 per hour. So what they noticed is that 27% of employees actually used earned wage access or early wage access for emergencies, which is like the most common source of financial stress, right? Because emergencies, of course, cannot beat any sort of stress in the world. 24% used it for their groceries or their daily rent or even the most basic needs, right? So they actually used it for that. 22% used it for utility bills, like an electricity bill or a phone bill or anything like that. Similarly, 14% used it for rent, which is like the most common stress source because it's on a specific day, you have to pay on a specific day, and if you don't, the landlord keeps calling you, bothering you, and then it creates a lot of stress in your mind as well. So lastly, let's talk about the challenges. Once you've spoken about execution, even after you execute or while you're executing an EWA program, there are a lot of challenges which will come in. However, this is a little simpler in nature as a program. Challenges are limited, but still does not mean that there aren't any. So the first and foremost challenge, and I've highlighted that as a topic itself, is payroll integration, primarily because of two reasons. One, sharing salary data for any organization is a very touchy topic. And again, while Western organizations with gig economy and blue collar workforce have kind of made their peace with it, Indian companies are still not there in terms of data sharing and data privacy, right? So sharing a salary data for any employer is really, really difficult. Most of the companies who are very on board with the fact that, okay, this is a great program might do it because at the end of the day, it's a benefit to the employee. But there are a lot of companies who are very touchy on that particular topic. So one simple way of fixing that, so we kind of fix it into three models. One model is we ask for a salary slab for the employees, that you don't give me the exact salary of the employee. You tell me the slabs, that this employee falls between, say, a 25K to a 30K slab. This one falls between 30K to 50K slab. So if you're between a 30K to 50K per month slab, your base salary is automatically assumed to be 30K. And then you are given the maximum deduction on that 30K itself as a availability and a limit. Another way of fixing the salary sharing problem itself is you make it opt-in. So the employee can pick and choose if they want to actually share their salary data, and they share the salary data while they're actually applying for the EWA itself. If that happens, then you give the consent and you can automatically pull out salary from the payroll itself. And there, since you've given the consent, the organization will not mind it. But in that case, the employee does not have a complete visibility around how much exactly I'm allowed to pull out today. The third way, which is, in my opinion, the best way, is usually companies are very wary of sharing salary data for certain band levels and above. But for certain band levels and below, it is okay for them to share that information. So for the ones which are lower band levels, you should ideally share the exact amount, because there even 1 rupee matters to that employee. So then they can actually take a leverage of the exact salary and not just fall in the lowest slab basis, the salary structure itself. And for the higher levels, you share slabs. So they don't care if they're getting 100 rupees or 500 rupees lesser in terms of access, because their usage is also going to be not that high as compared to your lower band salaried employees. Second challenge in terms of employers which come in while implementing EWA programs is that employers fear that your payroll deduction will cause employees coming to them and saying that, I did not know, I took this access by mistake, and now you're deducting my amount from the payroll. Please don't deduct it from my payroll. And they'll fall into like a complicated situation where your employee is saying that please don't deduct my money, and the partner, you have an agreement which clearly states that you have to deduct it. So to fix that problem, typically what EWA companies do is, one, whenever you're taking an access, a loan agreement is signed between the EWA partner and the employee, and employer is not a party to that entire piece. And in that agreement, along with a separate consent, is asked from the employee itself, that you have to tick that I am consenting to get this amount deducted from my payroll, and that consent is stored somewhere in the reports or in the admin dashboard for the employer itself, so that tomorrow the employee does not come and say that, okay, I did not know about it, because you've already given your consent out here. The third major challenge in EWA is it's a need-based product. It's not like it's not like a rewards program that I've gotten points, so I have to use it here. Or it's not like an attendance that I have to go and give my attendance every day. This is something which is kind of, it falls under the category of nice to have. So adoption becomes a very big challenge when you're looking at EWA as programs. So it is really, really important to have a very robust communication plan. Typically, do a pre-launch hype, do a post-launch hype, constant emailers, constant communications going to employees, and the timing needs to be perfect. The timing needs to be around the end of the month or just before a big sale, when you know that employees will be looking to actually take this money to drive higher adoption, and also give them that option and not let them go to like these B2C companies where you're actually getting higher rates as well, because you are a corporate employee. Why not take the benefit of that? Similarly, leadership needs to be very, very involved when it comes to driving any financial wellness program in the organization. While for a leader, this might not be very relevant as a person, like personally, it might not be relevant to me as a leader, because when was the last time I went and applied for a personal loan? It does not mean that my peers or my team members don't need it. So, as leaders, you have to be very gung-ho about the fact that financial wellness is important to me, because it is important to my employees, and their adoption and their usage makes a big difference overall in terms of sharing that entire exposure, sharing that entire experience with the employees, and having them utilize the benefits of these financial wellness programs itself. And of course, if people have benefited strongly from these earned wage access programs, share their case studies with other employees in the organization, of course after their consent, if they're okay with it, that how this program has benefited them. Because when you see that, okay, my peer is getting benefited by this, you again, get an additional trust factor. You want to actually use it, you want to try it out, that okay, it worked for you, it might just work for me as well. And lastly, of course, employer deduction sometimes becomes a challenge. These are like rare scenarios where the employer has promised you that they will deduct from the payroll, but then they actually don't. And a rarer scenario is when your partner has told you that they will disperse, but for some reason they're not able to disperse. Maybe there's a problem with the NBFC or whatever reason. So for these issues, I feel that the agreement should not be taken lightly. When you're actually partnering with, there needs to be a fear of loss for both the partner and the employer as well. So there need to be some, maybe if the employee deduction does not happen, some penalties in place. Same thing vice versa, indemnity needs to be on both sides. So agreement becomes a very big blocker when you're actually launching any earned wage access, if you're doing it right. If you want to do it like just for the sake of doing it, then it just doesn't work very well. So there needs to be the right set of responsibilities in a statement of work prepared, that what is the employer's responsibility, what is the employee responsibility, and what is the service provider's responsibility, to ensure that these future issues can be preemptively blocked and ensured that they don't happen again. So typically, to just end this entire conversation, I think I have completed my 45 minutes now, and I hope everyone's still awake and still listening. I'll just leave you with one thought, that if you have to win in the marketplace, you have to win in the workplace. And creating a holistic wellness program for an employee, not just physical, but also financial. And financial wellness also takes care of your mental wellness, by the way, in many ways. It's really really important to ensure that your productivities are high, your employees are stress free, and you have programs, even though they might not be used more than 20-30% in terms of such emergency situations, but still you have those programs in which the employee feels that okay, I am taken care of and my employer really cares about me. So that's pretty much it in terms of EWA, its entire overview, and I hope I've done justice to this entire topic. If any of the viewers are interested in EWA as a concept, or implementing it in your companies, or even for that matter, just want to talk about it over a coffee or a virtual conversation, please do reach out to us. We'd be happy to help you understand and implement it in your companies too. Thank you so much.
Wow, Smiti, thank you so much. You spoke about if people are still awake. Well, everybody was wide awake because that was a super insightful and amazingly detailed presentation, I must say. But Smiti, before we open the floor for some questions, because we already have quite a few here in the Q&A section, I think we'll give you a small break and we'll take a look at the video on Tether that we couldn't due to some technical issues. So I will quickly share my screen.
The strength of the wolf is the strength of the pack. The strength of the pack is the strength of the wolf. Since our founding, M2P has wanted to give back to the community we grew from, which led to the birth of Tether. Tether is a community for like-minded people from across the globe. This includes startup founders, fintech professionals, students, and enthusiasts. Tether, with thousands of members like you, will act as a catalyst in the growth of the fintech industry. Tether also acts as an open forum where participants can reach out to industry experts, learn and grow. You can receive mentorship from industry leaders, mentorship for funding, an opportunity to network with peers, and access to a world of events apart from a host of services. Join your peers today. Grow together. Tether together.
All right. So that was the video. And with that, I think, Smiti, we can open the floor for some questions. We already have quite a few here in the Q&A section. Again, reminding all of you, if you have any more questions, feel free to put your questions here in the Q&A section. So moving on to the first question, Smiti. This is from Sargi Pragada, and she says that she's just learning about EWA, and her question is, does it mean you have to link up with a bank and give employees money even before it is due?
Yeah. So typically, if you are an EWA provider, you don't have to necessarily link up with a bank. I think there are a lot of NBFCs available in the market today who are maybe not that front facing, but they work as like a back end where you can integrate with them and they provide the corpus. Typically, the way it works initially, if you want to start an EWA program, you partner with an NBFC, you work on something like an FLDG model where it's a first loss guarantee. So that is the most common way of working with any NBFC in the market, and you can instantly start like any sort of EWA program if you have the technical capability to build it as well. Eventually, once your usage starts becoming better, that is when, if you have like a huge corpus coming in, and eventually then you can tie up with the bank, you can have better rates as well. But initially, if you start tying up with banks, it will take forever. So quick launches are always with NBFCs, and eventually you can have multiple partners funding your corpus once your corpus becomes big enough.
Thank you, Smiti. I think that answers Sargi's question beautifully. She has another question to you, Smiti. You mentioned an interest being charged. Who is being charged this interest, and is it the borrower? And typically, how much is it being charged?
Yeah. So there's no interest rate. Interest rate is there for the B2C, loan providers itself. For something like an EWA, typically there is a convenience fee which gets charged. Now, convenience fee changes depending on slabs. Like, for example, for a 20,000 rupee loan, the convenience fee could be anything between like 150 to 200 rupees. For something like, say, 1,000 rupee loan, it could be as low as 9 rupees, 10 rupees as well. So there are different slabs which usually are created, and again, that formulation is also again done with the kind of NBFC you're working with, what kind of customer audience also you have. Like, just to share a few examples, something like a hospitality industry has crazy attrition. So their attrition rates are as high as like 15%, 20% monthly, not yearly. So typically in those cases, you have to factor in the pedigree of the customer as well, because their attrition will be so high that you have to keep your losses in check. But for something like, even in hospitality, if I take like an airline industry for example, one of the interesting things about airline industry is attrition is literally nil. Primary reason being that even your baggage handler who is handling your baggage on the airport cannot abscond, primarily because if he absconds, the airline authority of India will debar him from the entire airline industry, and he'll not get a job in any other airline. So their absconding rates are nil. So there you can actually give a better rate. So even in single industries, depending on the kind of uh, absconding rates employers have, the rates also change accordingly.
Thank you so much, Smiti. I think with the examples, we were able to understand this better. So, moving on to the next question here by Ash Sudhakaran. They ask that employee gets benefit only when on payroll. What about off payroll employees or gig workers?
Yeah. No, that's a very fair question, and uh, I don't think there is a valid solution for that today as well. It's, I think, some one of the solutions which is being built uh, within India as we speak, right? Whereas if you look at, say, the US market, like I said, your India market is always 5 years piche than the US market. So in US market initially started with all your on-roll workers. Now there are also focuses on payroll solutions where you can support the gig economy as well. So as and when the payroll solutions evolve, where gig economy and your off-roll workers, contract workers can be supported, EWA will sit on top of that. So until and unless you have that evolution in terms of payroll platforms themselves servicing the gig workers, the EWA platforms will not be able to serve them in the right manner. So while this has already played out in the US, I think this is eventually going to play out in India as well. But as of today, from what I know, most solutions do not prefer non-payroll deductions, because again, the maximum cost of operation is on collection, and if collection is not sorted, or if an organization has a way to sort collection even beyond a payroll deduction for gig workers, then also the platforms can work with them. So it's a very nascent product, and unfortunately I don't have a very perfect answer for it, but I think that's how the program is in India today for gig and non payroll employees. It's it's still evolving, so it's not perfect. So once it will get perfect, probably I guess our gig economy workers will also be able to utilize it. And I personally feel that they need it the most. I mean, if we're able to provide it to them, uh, that is like an even bigger market than what we're talking about for the corporate tax paying employees today.
Well, very well answered, Smiti. Thank you so much. Here is the next question again from Sargi. I think you kind of uh, talked about the attrition rates and the industries, but here's another question. Um, you're talking about employee stickiness, but isn't this risky for the EWA? What if an employee runs away? Do you have to answer to the RBI, especially if you skip KYC?
Yeah. So that's where your FLDG models come in. So typically, when you are doing like an FLDG model with any sort of NBFC, there is a percentage built in which you take as a risk. Usually, it's 10%, and the remaining is taken care of by the NBFC itself, right? So of course, absconding is always a risk, and that is why payroll deduction becomes such an important piece, and profiling of the consumer also becomes very important. I mean, if I talk about Advantage Club, we've worked with companies, two types of companies in hospitality. One where we have actually lost some money as well, and then another company in hospitality where we've made a lot of money as well, and people are really happy with the solution as well. But even the place where we lost money, people were happy, but this is that absconding rates are so high that you can't do much about it. And that's where it becomes important that your amount which you're charging in terms of convenience fee gets factored in. Plus, a lot of times what we do now is that when we know that there is a high absconding market or a high absconding company, we also integrate in a way in which we get the attendance data of the employee. So you typically understand that, especially if an employee is about to say abscond, they start attriting, they start being more absent in nature. There are certain patterns which you start understanding. They go on like a 2 week leave and then they never come back. So it's important that not to give those accesses at that point of time when they're not actively involved in the payroll. Of course, there will be drop offs, and the EWA partner and the NBFC has to take care of it. But at the end of the day, it's no risk for the employer, and that's why the employer proposition also comes in play.
Thank you, Smiti. Again, a great answer. So the next question is from Arvind, and he wants to ask. I think a lot of people want to ask the same question to you. What do you think is the most significant barrier to female leadership, and your advice to women entrepreneurs in the fintech space?
So I will actually place women leadership in two eras, right? There was this era probably 5 years ago when female leadership was like it was a very new thing when people were. I used to go and meet people and they used to be surprised that, oh, as a woman you're a founder. And in the past 5 years I don't hear that question anymore. I think the world has evolved in that way, which has been one of the good things where people have started accepting women in leadership positions. And there's a lot of stigma which comes across women being in the leadership position, because let's think about it. When you start your career, you're never in a leadership position. By the time you are eligible to be in any sort of leadership position, as a woman, you are in a situation in which you might be looking to maybe start a family, you might be looking to get married or have children, and that raises a lot of questions on the leadership ability of women itself. That will you be able to manage both things perfectly? And you know there are a lot of situations where there's not a lot of support from the family, from say the husband or the family members, where even from your own parents, right? Sometimes they pull you down and they say that how much are you going to actually manage. And leadership is a very difficult role. It's something in which you have to not only manage your teams, you also have to show your own individual contributions so that people respect you as a leader. So I think that's one primary challenge which comes in even today, around accepting women leaders, because of the fact that maybe they don't have enough support from their families and friends around continuing to lead. Second problem which comes in is a lot of people are very wary of the fact that a woman might need to go on a break for some time because they have certain life changing situations in their life. So when you come back from a break again, it's like you're restarting again, right? So typically when you have a kid and you go on a break and you come back, that is also another challenge which usually women have to face when they're looking at leadership positions. And within that 6 month or 1 year, you are technically replaced by another leader during that time. Maybe a man or a woman, doesn't matter, but that's also another challenge which typically comes in. And thirdly, I think around the overall education to women in the country around why career is such an important thing. I think that thought process is changing now, but it's still not completely changed, that a woman's career matters. Even today, like, a lot of people feel that the man needs to be the breadwinner of the family, and nobody a woman is just adding on extra money in the family, right? So that career importance to be given to a child ever since they are a kid, telling a girl child itself that it is important for you to build your own career is something which I think we need to all change and adopt as a country. uh, I think in the West we've already adopted in some of the other ways, but again, I think 5-6 years behind Chatham, so we'll reach there some point, I feel.
Thank you, Smiti. Very well put. I think, like you mentioned, things are changing, but there is still a lot of stigma attached to women in leadership positions, and people like you are breaking those stigma on a daily basis. So,
And just to add
moving.
that, Shrija, interestingly, the stigma is not there for education. Like, you think about it, if you think about your school days, right? Your topper would most probably be a girl, right? So they're always, girls are always the toppers of the school, and they're always people who are, very good at studies, and they're at least in tier one, tier two countries, they're very encouraged for studying. But the same does not happen the moment they jump into a career focused place. So I think that's where we need to change our mentality.
Absolutely, absolutely, Smiti. And I saw a lot of people sharing thumbs ups on the screen. So a lot of people agree with you here. So moving on to the next question by Ash again. It's quite common for US employees to have bi-monthly salary payments. So wouldn't this affect their credit patterns?
So not really. So again, so I have worked in the US myself, and I was paid every 15 days, right? In India, I just feel that this was tried to be done. Like, there's a company everyone knows about, Neo. When they came in India, they came with this concept of 15-day salary. So that's what they started with. They wanted to deploy 15-day salary in all organizations so that people get like their salary every 15 days. But I also feel that I've been through this 30-day salary cycle. I've been through this 15-day salary cycle. It doesn't make a difference. I mean, you modify your lifestyle accordingly. If you're getting paid for 15 days, again, there might be situations in which in the 10th day you are out of money. If you're getting paid every 30 days, then on the 20th day you will be out of money. So credit cycles is not really made much of a difference whether you're looking at 15 or 30-day payments, at least in my personal experience. In India, it has not played out well, so I don't have enough data to claim that yet. But maybe someday, if we all adopt 15-day salaries, we'll have better understanding on the same. But I really feel that the money is also halved, right? Even though the days are halved. So maybe you can pay your rent, but then at the end of the day, you are out of money because more money goes in the first week of the month as compared to the second half of the month. So you have to anyway save that money for the first 15 days. So it just ends up being the same thing end of the day.
Absolutely. Amazingly put, Smiti. I think a lot of people, bi-monthly salary sounds like a dream, right? But I think there is a lot that goes into it and beautifully explained by you. So here's the next question. Actually, this is from one of the social media questions that we got for you. So are there any tax implications on the income earned via early wage access, especially in between two financial years?
Yeah. So typically, let me just first talk about the actual deduction which happens on the salary. So the deduction happens after the taxes are deducted. So the deduction is on the tax deducted salary. That is your by deduction I mean your convenience fee deduction, right? So the amount which is calculated in terms of convenience fee is on top of your um, tax deducted salary. So taxes are already taken care of when you're actually taking that money. It is similar to taking like an unsecured loan from the market. So it doesn't make much of a difference. In terms of financial year split, like for example, if you take say an earned wage access on the 30th of March, now your financial year is changing, but your deduction is happening in April or May for whatever reason, for that particular amount. The tax calculation will still happen for March, right? So the tax has already been deducted. The income is calculated as per the financial year itself. So it doesn't matter when the amount is getting deducted. The calculation for that income actually happens in that same financial year itself. And since taxes are already deducted, it doesn't make any difference whether you're taking it from the employer or whether you're taking it from a third party or like an EWA provider. So nothing changes in that particular case. One thing which changes is on your payslip. So when an employer is actually giving the earned wage access to you, then in the payslip it comes as a additional row that this is a deductible amount because you were paid less, right? So this much amount was deducted because of the loan which you have taken. But again, there are no tax implications which come out of that.
Thank you, Smiti. All right, so this is the last question that we'll be taking in. This is from Mahalakshmi, and she is asking, tell us all some interesting lessons you have learned as an entrepreneur, which we can take away and apply to our lives and ventures.
Oh, this is a very long question. I can go all night, so everyone will have to stay here for at least the whole day. So I think one of the biggest lessons, and I think what I'd like to share is, before I started this entrepreneurship journey, I used to always feel that um, I will be like my own boss, right? When I started it, I realized how I could not be even more wrong than that, right? So I realized that everyone around you, every employee, even your clients, even your peon is your boss, right? So typically there is so much of effort which you have to put in terms of playing multiple hats, and in terms of ensuring that things are moving the way you want them to move. Plus you can't let that stress and that pressure show on your face. That is the worst of them all, right? Because the way you behave is how your team is going to behave. If I don't go to the office in the morning with like a big smile on my face, if I'm like all grumpy, then my whole company will be grumpy that day. It's a weird trickle down effect which happens. I don't know why, but it always happens whenever depending on how the entrepreneur behaves. And you look at any startup for that matter, the company's energy will always be determined by the entrepreneur's energy. If the entrepreneur is very excitable, then the company is also very excitable. If the entrepreneur is kind of laid back, then the company is also laid back. If the entrepreneur is unethical, then the company is also unethical. And I'll not take names, but we all know situations in which ethics have been questioned and the whole company has been doing it apparently. So I think that is one major takeaway which I have realized overall in terms of entrepreneurship, that you have to be always on your toes, and you cannot just think that you're the boss of everybody and things are going to work in your favor. You have to kind of face challenges every day, move forward, all of that. Second thing which I've realized is that passion is necessary to start a company, but it's not the only sufficient condition to start a company. I mean, of course, without passion, you will never be able to go in the difficult times, because there will be a lot of bad situations, a lot of roller coaster rides which will happen. Without passion, you'll not be able to go ahead. But there are so many other things which come on top of that, that passion is not the only thing which will keep you continuing as an entrepreneur. You have to keep implementing it. You have to keep taking risks. You have to keep moving forward. So that is the first and foremost thing which is required. And yeah, I mean, if you're just like an idea guy, that's not enough to start a venture. It's just you learn everything. You learn something new every day. And my last primary learning would be, I think a lot of people ask me that, should I be a solo founder, or should I, if you're looking to say start a company, that should I be a solo founder, or should I be like I should find co-founders? So I always say that, think of what kind of a person you are. Like, if first of all, if you have enough financial capital which is relevant, and you have enough experience which is relevant to your industry and you feel you can do it yourself, then you should solo found. If you have a strong preference that you want all the decisions to be done by you, then you should, go solo. If you feel that you don't need support or validation from people, and there are a lot of people in the world who don't feel that they don't need validation from everybody, then they are strong enough to solo found the company. And of course, if your objective is to run like a smaller business in a slow moving industry, more stable and not very explosive in nature, then solo founding is a good idea. If you want to do other things, like you should build a founding team. If you feel that you don't know everything, one, maybe you're very good at technology, but you're not that good at sales or business, so you need somebody who can fill in that gap for you. You feel that you don't want to do everything. There are certain things you want others to do, and there's certain things you want yourself to do, so you prefer a collaborative style instead of being like a one man army. Then you should find co-founders. And if you feel that you constantly feel that you need support from people, when you're down, you need somebody's validation that you're doing a great job, everything will fix and it'll move on, that's when you should definitely look for a co-founder. So I think these are the few learnings which I have had in a very, very small nutshell. Of course, I can keep going on and on, but I'll pause here for the essence of time of everybody.
Thank you so much, Smiti. I think your advice is going to stay with a lot of us here for a very long time. And that was the last question that we were taking for the Q&A section. We have a few more questions here, but I would like to tell you all that we will soon get back to you with the answers to that after the event, because we have a little bit of time constraint here. So, Smiti, thank you so much for taking your time out and joining us here today to speak about a topic that is seldom thought through. On behalf of the Tether community and personally as well, I thank you for being part of today's webinar. Thank you so much.
Thank you so much, Shrija, and thank you, Tether team, for giving me this opportunity. It was really lovely interacting, and I hope everyone enjoyed the talk itself. Thank you.
Absolutely. Thank you so much, Smiti. All right. So I think with that, it is time to move on and kind of pick up the pace for the last segment of today. So we also have a really fun quiz prepared for you. And for that, I would request my colleague here, Aman, to share his screen so that we can go over the instructions on how you can join in to the quiz. All right. So, a quick heads up for all of you, the quiz will be taking place on this platform called Kahoot, and you'll have to give in your answers in the Kahoot platform itself. If you by chance get logged out of the Kahoot platform in between due to some network problems, then do not worry, you can join in with the same game pit that will be shared with you. So, for a seamless experience of the quiz, we would request you to have an additional device ready. For example, if you're joining this webinar on a laptop, then we would request you to grab a phone or a tablet maybe to play the Kahoot quiz on. Right. So, how do you join Kahoot? So, this is what many of you might be wondering. Well, you don't have to download any apps. You can just go to www.kahoot.it on your additional device in a browser. And as soon as it opens, it will ask you for a game pin. You can wait there. Once we start the Kahoot quiz, the game pin will be visible and will be shared with you on the chat as well. And once you enter the game pin, you put in your full name, your registration name, and we are good to go. We can start the quiz. So yes, so type in the code and your name to join the game. As I already mentioned, once you enter, the game pin will be shared with you. And if you're wondering how will I know if I won the quiz or not, how is it going to work, how scoring going to work? Well, do not worry at all. Kahoot declares the leaderboard immediately based on your speed and accuracy. So just being accurate isn't enough. You need to be super quick as well. So what are the different type of questions you can expect in today's quiz? So well, there are three different types of questions that you can expect. So one is the direct question, which is the MCQ format where you'll have to select one right answer. Then there is the type answer format where you'll have to type in your answer manually. And finally, there's a true or false format of a question. So these are all the instructions, and I think we are good to go with the Kahoot quiz. So we'll be now sharing the Kahoot screen with all of you, and the game pin will be visible there itself. So while my colleague here sets up the Kahoot screen, I would request all of you, again reminding you to grab your additional devices And even if you don't have an additional device lying around, no worries. You can open another tab in your browser and go to www.kahoot.it. All right, so here is the game pin. As you can see on your screen, it is 5820749. That is your game pin. You'll need to type it in. Uh, just so that it's easier for you, we've also shared the game pin on the chat here. So do take a look. All right, I can see a lot of you are already joining in. I can see Hari, Charan, Loki, Tejaswini, Ishak. A lot of you are here. Great. We'll wait. Take your time, join in. While we wait, again, saying the game pin out loud just to help some of you. The game pin is 5820749. As soon as you feed in the game pin, I would request you can put your full name in or your first name. I can see some of you have joined with Michael, Prince, so you have joined in with your first names. I can see a GP here, again requesting you, if possible, feed in your full name. Amazing. We have quite a few here on the call. Just because there's a time constraint, I think we can start with the quiz. The game pin will be shared with you on the chat so you can join in between. So that's not an issue. Okay. I think we are 20 here, so I think we can start. All right. Here is the quiz. 3, 2, and 1. Let's take a look at the first question. Which among the following is a benefit that is associated with EWA? Is it higher employee retention? Is it reduced financial stress for employees? Is it increased employee satisfaction? Or is it all of these? I think if you have paid attention throughout the presentation today, you will know the answer to this. Less than 3 seconds remaining. Let's take a look at the answer. And yes, 18 of you getting it absolutely right. The correct answer was all of these. So let's take a look at the scoreboard after that question. Amazing. Looks like Rafiq is in the lead, followed by Raj, Sargi, Abhik, and Kathir. And as you can see, this is quite neck to neck. So a lot of questions waiting for you. Moving on. Here is the next question. What is the official UK government term for EWA? Is it instant pay? Is it demand pay? Is it employer salary advance scheme? Or is it accrued wages? What do you think is the correct answer? Again, what is the official UK government term for EWA, which is early wages access? And yes, 12 of you getting it absolutely right. It is employer salary advance scheme. And let's take a look at the scoreboard after that question. Wow, looks like a lot of change happening here. Tanuja has come in the first position, followed by Kathir, Charan, Daniel, and Ishak. Up 10 places, Michael is the highest climber. Good going, all of you. So here is the next question. Which among the following methods can EWA technology be implemented into? Is it automatically loaded onto a prepaid card, deposited via ACH into a direct deposit, accrued earnings transferred into bank, or all of these? What do you think is the correct answer to this question? Less than 1 second remaining. Let's take a look. Yes, again, the correct answer is all of these. 17 of you getting it absolutely right. Let's take a look at the scoreboard. Wow, again, a lot of change. Kathir is in the first position now, followed by Daniel, GP, Loki, and Ishak up 4 places. Abhik is the highest climber. Good going, all of you. Here is the next question. Around which time frame was the concept of EWA introduced? Was it 1990? Was it 2000? Was it 2010? Or was it 1980? Again, a little bit of history type question here. You'll have to remember the dates. But you can also take a guess. That's the beauty of multiple choice questions. Let's take a look. Yes, 10 of you getting it right. Looks like this was a googly question. 2010 is the correct answer. Let's take a look at the scoreboard. All right, looks like there has been a lot of change. Loki has a streak of 4 correct answers in a row and is in the top position now, followed by Abhik, Rafiq, Ignatius, and Kathir. Let's move on to the next question. All right, in 2020, which firm, along with Zayzoon, gave frontline workers earned wage access after their shifts? Was it Bank of America? Was it MasterCard? Was it Capital One or was it Visa? So take a look from at the picture clue that we have provided you here as well, and select one of the options on your screen. Absolutely, Visa is the correct answer. If you paid attention to the image, that was the Visa logo. Moving on, here is the scoreboard. All right, again, a lot of change, up 8 places. Tanuja is the highest climber and Daniel is at the top right now. So let's see how this changes. Moving on. Right, here is the next question. Which American company that operates Sam's Club introduced salary advances in 2017? Was it Walmart? Was it Costco? Was it Amazon? Or was it Target? Again, think about Sam's Club. Which company operates it? And that's a clue for all of you. Less than 3 seconds remaining. And yes, 13 of you getting it absolutely right. It is Walmart indeed. Let's take a look at the scoreboard after that question. Right, a lot of change, but Daniel is sitting, tight in his first position, followed by Hari, Tanuja, Ishak, and Charan. Up 7 places, Kathir is the highest climber. Moving on to the next question. Hari Gaji, the Malaysian platform, offers which financial service? Is it earned wage access? Is it salary tracking? Is it financial education? Or is it all of these? So that's the logo of Hari Gaji on your screen. Take your guesses. Less than 3 seconds remaining. And yes, all of these is the correct answer. Again, a little bit of googly. Most of you went with EWA. Let's take a look at the scoreboard. All right, Daniel's still in the first position and up 6 places. Abhik is the highest climber. Let's move on and take a look at the next question. Wagely and Gaji Geza, the EWA platforms, are associated with which country? And the flag is a clue here. Is it Thailand? Is it Indonesia? Is it Singapore? Or is it Vietnam? Again, I think this question is not only seeing your knowledge in EWA, but also flags. So let's take a look at the answer. Absolutely, 14 of you getting it absolutely right. It is Indonesia indeed. So here is the scoreboard. Okay, Ishak has dethroned Daniel, and up 3 places, Kathir is the highest climber. Good going, all of you. And moving on, this EWA platform announced its partnership with Sage Payroll Software to help employees take control of their salary. So, which one is it? Is it Refine? Is it Finclusive? Is it Flex Earn? Or is it Payflow? So, these are all of your options. And we have a logo of sorts on the screen for you to take a clue from. And let's take a look. Yes, again, looks like a little bit of a googly, but 7 of you getting it absolutely right. It is Flex Earn. So we will now take a look at the scoreboard. Okay, Daniel has taken back his first position. Tejaswini has the highest answer streak of 3 with that question. Moving on, let's take a look at the next one. All right, which ride-sharing app partnered with Green Dot in 2016 to help its drivers get paid promptly? Is it Lyft? Is it Ola? Is it Uber? Or is it Grab? Again, think about which ride-sharing app partnered with Green Dot in 2016 to help its drivers get paid promptly. Less than 3 seconds remaining, 26 answers in. Let's take a look. Yes, 14 of you getting it absolutely right. It is Uber, and the picture clue was a big help, I'm assuming. Yes. Not much of a change. In the first position, Daniel is sitting tight. Hari, Charan, and Kathir moving into the scoreboard. Up 5 places, GP is the highest climber. Here is the next one. Which HRMS and services provider tied up with PayActive in 2018 for EWA capabilities? Is it ADP? Is it SAP? Is it Oracle? Or is it Epicor? And you can see a logo unfolding in front of you. And less than 3 seconds remaining. And let's take a look. Absolutely, 15 of you getting it right. It is ADP. Let's take a look at the scoreboard after that question. All right, Kathir and Rafiq moving into the scoreboard. Up 4 places, Tanuja is the highest climber, and first position still is Daniel's. So here is the next question. In 2019, who announced a co-branded card with Lyft to give drivers immediate access to pay? Is it American Express? Is it PayPal? Is it Visa? Or is it MasterCard? Again, a picture clue is unfolding in front of you. Take a cue from that. And less than 3 seconds remaining. Time to feed in your answers super quick. And yes, 20 of you getting it absolutely right. MasterCard indeed. I think the picture clue was a big help. And not much of a change, just all of you adding some points to your tally. GP just hit the answer streak of 3. Good job, all of you. Here is the next one. Identify this EWA platform from its logo. So is it earned card? Is it level finance? Is it pay me now? Or is it Pagely? Take a look at the picture clue again. Slowly the answers are trickling in. Less than 5 seconds remaining. Time to quickly feed in your answers if you haven't yet. And time's up. Yes, 21 of you getting it absolutely right. It is pay me now, and the logo had a subtle P in it as well. Moving on. All right, not much of a change again. Just Rafiq moving up the ladder, and up 3 places. Logan is the highest climber. Good going. Let's move on. Here is the next question on your screen. Which among the following is not a type of EWA program? Is it direct to consumer? Is it employer benefit? Is it self-hosted advances? Or is it self-hosted monthly pay? Again, which of the following is not a type of EWA program? And time's up. Okay, this is again a googly question. The correct answer actually is self-hosted monthly pay. And 6 of you getting it absolutely right. Let's take a look at the scoreboard after that question. All right, Logan just entering the scoreboard, and this was a tough round. Looks like 4 of you lost your answer streak. No worries. Let's move on and take a look at the next question. With which country are EWA platforms Pay Me Now and Level Finance associated? Is it Taiwan? Is it South Africa? Is it France? Or is it India? Again, a picture clue is unfolding in front of you, testing your knowledge in flags as well. So, less than 2 seconds remaining. Let's take a look. Absolutely, 22 of you getting it right. It is South Africa. And Daniel has a streak with 7 correct answers in a row. Good going, Daniel. And Rafiq again has moved up the ladder. So let's move on to the next question quickly. Which EWA platform was founded by Asian American entrepreneur Safwan Shah in 2014? Is it PayActive? Is it Finclusive? Is it Earned? Or is it Daily Pay? What do you think is the answer to this question? It was founded by Asian American entrepreneur Safwan Shah. You must have heard about the company. And all right, looks like 6 of you got it absolutely right. It is Pay Active. So let's take a look at the scoreboard after that question. All right, Daniel holding on to his first position, followed by Hari, Ishak, Logan, and Tejaswini. Up 4 places, Tanuja is the highest climber. And here's the next question. Which EWA platform is associated with the marketing positioning Give That Payday Feeling? Is it Branch? Is it Chaser? Is it Claire? Or is it Abhi? What do you think is the answer? The marketing positioning Give That Payday Feeling. Again, less than 5 seconds remaining. 26 answers in. And let's take a look. Yes, absolutely. 23 of you getting it right. I think the picture clue helped. It is Claire. And again, not much of a change on the scoreboard here. Logan has a streak with 8 correct answers in a row. Good going, all of you. And here, moving on to the next one. In 2021, who announced a partnership with Rain India, an EWA and financial wellness provider? Was it Workday? Was it Ceridian? Was it Benefit Focus? Or was it Ultimate Chronos Group? What do you think is the answer? Again, this happened in 2021, a partnership with Rain India And yes, looks like 19 of you are getting it absolutely right. It is Ultimate Chronos Group. And again, not much of a change. Logan has a streak with 9 correct answers in a row, and Kathir moving up the ladder. So here's the next question. Identify this on-demand pay platform which was co-founded by Ron and Kaling Gaver. Is it TapCheck? Is it Chaser? Is it Credit Hound? Or is it Profix? What do you think is the answer? Again, less than 5 seconds remaining. Over 26 answers in. It is an on-demand pay platform that we're looking for. And yes, TapCheck is absolutely right. 20 of you getting it correct. Moving on. Again, not much of a change. Charan entering the top 5 and 10 players have reached the answer streak of 3 with that question. Let's move on and take a look at the next question. Identify this Bengaluru headquartered venture which claims to be India's first EWA platform. Is it Branch? Is it Refine? Is it Revolut? Or is it Razorpay? What do you think is the answer? Again, a picture clue to help you out. Think about it, a Bengaluru headquartered venture which claims to be India's first EWA platform. Absolutely, 17 of you getting it right. The logo was a help. Refine is the correct answer. Moving on. Absolutely. This is a quick feedback time. So please do send in your feedback on the chat here so that we can better our next upcoming events. With that, let's take a look, I think, at the leaderboard. But before that, here is a poll for all of you. How would you rate today's quiz by Tether or Early Wage Access Employee Centric Fintech Services? So, would you give it 5 stars? Would you give it 4 stars? Would you give it 3 stars? Or would you give it 2 stars? Your feedback is very important to us and do let us know. Again, with 5 being the highest, what would you rate today's event and today's quiz that we conducted for you here on Kahoot? So less than 2 seconds remaining. Let's take a look. All right, looks like most of you gave us 5 stars. That's really good to see. Thank you so much. Moving on. Here is the podium. Let's find out who won today's quiz. So in the third position, we have Ishak. In the second position, we have Hari. And the winner of today's quiz is Daniel. I think Daniel did really well today. Congratulations, Daniel. Runners up are Logan and Charan as well. This was a really fun quiz. Again, a very, very big congratulations to Daniel for winning this small quiz that we had for you. Okay, I think with that, we can stop sharing our screen. All right, thank you so much. And well, looks like this was the end of today's event, and thank you for being a wonderful audience today. Hope you enjoyed today listening to the game-changing approach of employee-centric fintech services. To catch up with all the action at Tether community, so log on to our website to join us as a member. The link to it is available on the chat here. And we are your hosts, Anaga and Shrija, signing off today. Have a healthy and safe weekend. But before we wrap up, a little bit of announcement that we have 2 more events coming up. So if you want to register for them as well and learn a lot about the fintech space in India, do register by going to our website, the link to which will be shared on the chat again with all of you. Saying that, again, a very big hearty thank you to all of you present here. This is a wrap. Thank you so much.